We are going to be putting the spotlight on the pharmaceutical sector, as I said. Before we go to Sarabjit, our expert for this morning, let's quickly get you two perspectives. Hiral joins us on why Bank of America Merrill Lynch has upgraded Sun Pharma, and Shell joins us with a report card of the first quarter results from the pharmaceutical sector. But Hiral, let me start off with you. Sun has been under pressure, but there is now an upgrade. So take us through the reasons for the upgrade that is being cited.
That's right, Minnie. If you go to see, Sun Pharma has underperformed the BSE healthcare index by almost 20% over the past few months. Now, what Bank of America Merrill Lynch is seeing is that they are seeing positives emerging out of Sun Pharma, and they've upgraded the stock to a buy from a neutral with a target price of 1,070, which is a 20% upside from current market price. Now, what they are saying is that they have raised their FY 17 and 18 EPS by 10%, and the EPS rise is mainly driven by a couple of factors. To start off with, firstly, what they are saying is that the $400 million potential synergies from Ranbaxy integration in FY 18 will be one of the key positives. Additionally, the recent price hikes that have been taken in the Taro portfolio and the ex-Taro US recovery could add close to almost $140 million in the profit before tax, and this would be impacted from the second quarter of FY 16. Additionally, they are seeing sequential improvement in the ex-Taro US business, which includes supply from the Halol plant as well, which will be a key positive to look out for. And they are expecting further improvement post the completion of the remedial measures at Halol, and this will be from effect third and the fourth quarter of FY 16. And even the Glevic launch, which was in Feb 2016, would add close to around $150 million of annual sales, which would add further comfort to the stock. And they are seeing the risk reward also pretty much favorable. And lastly, what BofA ML says is that they believe that the current valuations are very much a best entry point for investors who want to enter into the stock. Back to you.
Right. Before we get Sarabjit's views on this, let's also go across to Shell to see how companies stacked up with their numbers. It was a muted quarter for many of the big boys in the pharmaceutical sector. Shell, take us through how it stacks up for them.
That's right. So overall, when you're looking at the sector, a couple of the bigger companies saw a very muted kind of a growth, but a couple of the mid-size or the smaller companies have seen reasonably good growth as well. So overall, when you're looking at the sector, it's been a pretty much a mixed bag when you're looking at the pharma sector for the first quarter. Two or three broader points which apply across the board. The first one being that when you're looking at the India formulations business, that has gone in and seen sustained traction. Overall business coming in from the US has been strong, but apart from the two companies which are Sun Pharma and Lupin. And when you're looking at business as far as emerging markets are concerned, that has been slightly on the weaker side on the back of the currency volatility. Let's take a look at stock specific now and see really what has been happening. When you're looking at the sales growth this time around, the two companies which were slightly below what the analysts had anticipated as far as sales growth is concerned. First of all, Lupin, the company went and saw a degrowth in sales of close to 6%, and Sun Pharma also saw a growth of just 6.7%. On the other hand, as I said, a couple of companies which have performed very well. Cipla has gone in and seen a sales growth of almost 42%, Aurobindo 14%, Cadila, also one of the smaller ones, seen a sales growth of 17%. Now, when you're looking at the bottom line, again, quite a mixed picture. So, Sun Pharma has gone in and seen a decline in profit growth this time around of almost 60%. This was on the back of those one-offs, and this is on the back of the integration of Ranbaxy. The other companies, when you're looking at them, Lupin profits were below estimates, and they were down by 16%. On the other side, on the positive side, you've seen companies like Cipla, which have gone and seen a profit growth of almost 121%. This is on the back of the Nexium supply boost, and also the management has gone and increased their guidance as far as that company is concerned. Aurobindo Pharma also doing well as far as profit growth is concerned, and Cadila Healthcare as well. So as you're seeing, a few of the smaller companies have done much better as compared to the likes of Sun Pharma, Dr. Reddy's, even Lupin.
Right, Shell, thanks so much for that. Of course, the difference in performance in the markets have also been stark. Some of these mid-cap companies have done extremely well from the pharmaceutical sector. Two stocks that I will pull out. One is Aurobindo Pharma, which is up about 111% over the one-year period. And of course, Divi's, which is up about 57%. It is touching new highs almost every day. So that's where a lot of the action has shifted. But let's get you an expert analysis on where from here for these pharma counters. After the kind of spectacular returns that some of these counters have given. Sarabjit joins us now on this. Sarabjit, thanks so much for joining us. I'm going to start off with the big boys before I get to the mid-cap segment. So let's talk about Sun Pharma, Lupin and Cipla. Starting off with Sun Pharma. There were concerns about the amalgamation of Ranbaxy and the hidden issues in, or at least the not so obvious issues with Ranbaxy over there. But there is also compelling valuation, logic for a pick on Sun Pharma right now, because if you look at the top 3 companies on the Nifty, Sun Pharma has actually underperformed both Cipla and Lupin. How do you see Sun Pharma at this juncture?
See, as you rightly pointed out, it's a good opportunity for a long-term investor. That even we agree. Because Sun Pharma, in spite of, in fact, it should be appreciated that in spite of the fact that it's amalgamated a company like Ranbaxy, which because of which there are many one-offs happening in the company, in terms of operating performance, they have been maintaining it so far on the core operating margins. Because the core operating margins of the company are coming in the range of 27 to 28%. Which is in line with what the management has been guiding, that it would be with Ranbaxy would be doing OPMs of around 30%. And secondly, in terms of but the problem with currently with Sun Pharma is that in spite of the problems, the kind of guidance that they've given for this particular year and a revival in the next year and subsequent year, currently the stock is not performing as well as other pharma stocks are doing, because FY16 guidance have been given as muted. But we believe that given that the stock in terms of valuation, if you go to see, P is not the current right parameter, because the profitability is depressed because of merger, and which will and synergy benefits will come in the long run. So we believe that any investor who has a horizon beyond FY17 should definitely be looking at this stock. But from a year's perspective, we see a limited upside of around 9 to 10% from here on.
Okay, Lupin's Q1 numbers were a bit of a shock, Sarabjit, because there were a lot of expectations from the company. It was a big re-rating story as well, in fact, a big mover through the year. How would you look at Lupin at the current levels?
See, Lupin again, we have a neutral rating based on our FY17 numbers, and the reason primarily is valuations. Again, see, what happens is that in pharma, there are few companies like Lupin, Sun Pharma, which are predominantly very focused on US markets. So what happens is, in case US markets, US FDA approvals tend to slow down, these companies tends to suffer a lot in terms of their top line. And unlike other companies which are well diversified, these companies tends to show volatility in the top line, and that's what's happening in Lupin. They are not getting decent number of approvals. And apart from that, currency is playing havoc in other part of the emerging markets, and that's the reason that even management in Lupin has said that FY16 seems a bit difficult. And going forward in FY17, even if I assume a normalized growth of 20% and a decent OPM that the company is clocking, the stock is already 25, 26, so which leaves very little scope for it to re-rate. And as far as its re-rating candidate is concerned, I think a lot of consistent performance on top line and both as well as bottom line can be achieved by both the companies, Sun Pharma and Lupin. But there will be some quarters or years where there will be some lumpiness because of either acquisitions or slow approvals, and this will be more predominant in these companies because they are highly dependent on US market. So unless they compensate that through acquisition, which Lupin is trying to do, that's done a recent acquisition, though very costly also over there, not a very big size. So in these scenarios, a company which exhibits prudence in terms of maintaining its growth and profitability will be the company which will get re-rated. So in that sense, Sun Pharma has been one of the cheerleaders in the group, which has maintained its profitability very well in the past. So I guess with its current performance also delivering on OPM, I think they are exhibiting that they are more capable of handling such big acquisition and such large scale profitability of their assets. So I guess Sun Pharma and Lupin, it will take a long time to bridge gap. That's what I'm trying to point out. And secondly, yeah,
Okay.
so from valuation perspective, I don't see much happening in
Sarabjit,
Lupin also right now.
Yeah, I have a lot of stocks to talk about, so let's keep it a little quick. I'm going to ask you very quickly about Cipla and Dr. Reddy's. Cipla seems to be the big outlier in terms of numbers, a 41.6% increase in sales. It's also a company that has restructured internally. There's a lot of changes that's happened over there. How are you reading those signs?
Good set of numbers, as you pointed out, already factored in the numbers. The stock has been one of the stocks which have been running on every news, whether it's inhalation products or any product. Again, valuation a major concern, and we don't see much of an upside coming there also. Even in the next year, even we are expecting a 20% CAGR on the net profitabilities, but the valuations are constrained at 24-25 times, so we don't see much upside. Other stock that you spoke about was
Dr. Reddy's.
Dr. Reddy, I guess. Yeah, Dr. Reddy again was an underperformer for a pretty long time, but has done well for itself in the recent past. Again, over there, I think it's moved up significantly. So again, in pharma space, actually, we are not finding any comfortable stories right now, and we believe investors should take a patient outlook, because valuation in the space on an average are, if I take the space of my coverage, they are trading at 25-26 times FY17 numbers. So even exchange rate benefits or rupee depreciation benefits accrued next year also, I don't see much headroom for the stocks to move actually. So actually we are advising caution at this time in pharma space right now.
Okay. Okay, and especially so, I would say, in the mid-cap side of the market, where the valuations have really gone completely ballistic, Sarabjit. We'll head into a short break. We'll come back and talk about the clutch of stocks which have given almost 100% returns over the last 1 year period. Will the party continue, especially given the volatility in the global markets and elsewhere in the economy? We come back and talk to Sarabjit about a whole clutch of stocks. Stay with us. Welcome back. You're watching Bloomberg Bottomline. We are talking about the pharmaceutical sector. Good day to talk about the pharmaceutical sector, given the fact that the Nifty is being propped up by a clutch of pharma stocks, including Sun Pharma, Lupin, and Cipla, which are all up. Of course, Sun Pharma, there is a bit of re-rating happening because of a Bank of America Merrill Lynch report on that, an upgrade on that. But we are talking to Sarabjit Kour Nangra from Angel. And let's put the spotlight now on the mid-cap side of the market, where a lot of the action has been. Sarabjit, you sounded a note of caution about the valuations in the pharmaceutical sector. It has been the go-to sector every time there has been volatility. But I am going to now put the focus on the mid-cap side. Let's talk about a stock like Aurobindo Pharma to start with. The stock is up over 111% over the 1 year period. Part of the entire clutch of mid-cap pharma counters which have given spectacular returns. What's your call on Aurobindo specifically?
See, Aurobindo actually has grown to be a large cap now, because it's almost amongst the top 5 companies in the pharma space right now. So to that extent, the run that you have seen is justified, because it's amongst the big leagues in pharma space right now. And as you pointed out, it's doing fairly well in terms of organic and inorganic numbers. The quarter gone by also has seen a decent set of numbers coming in. And if you observe the performance of the company, it's more or less stabilized in terms of top line and profitability over the last couple of years. So I guess the run is justified. But as far as upsides are concerned, again over there we don't see the kind of upsides that's gone by in the stocks. We don't see an upside of more than 6 to 7% on the stock at the current prices. So over there also, though the stock is doing well and expected to do well in future, we think that the upsides are very limited.
Okay. One stock that doesn't have too much of a legacy issue is Syngene, Sarabjit, because it's a new kid on the block. It's had a damn good run in the ever since it got listed. You did a note on the IPO. What did you like about it, and what is a fair value, or how much upside do you see on it?
See, actually, when we released an IPO note, we had given an avoid on the company, and the reasons primarily were valuations. And though the stock has run up on the bourses, we don't expect that the stock has a huge leg up. Actually, the legs that are driving the stock currently are a huge lump up happening once they start the CMO facilities, and secondly, it's one of the rarest stock available in Indian market. But I have a lot of concerns pertaining the same. One is that once the company moves from CRO model to CMO, I have seen a couple of companies like Dishman is there, and many other companies are there which are totally 100% CMO based companies. They see a lot of volatility because it's a order based kind of a business. So that kind of a lumpiness and the valuation has to be justified. Secondly, the thing is that it's hinging on one project which is likely to be in phase 3 and likely to get commercialized. So that's one of the cases. Those are opportunities available across the CRO and CMOs globally. And if you compare the size of the company with the large CMOs in the CROs in the world like Quintiles, the profitability is similar, but the valuations over there is 26, 27 times, even DV trades at that levels. So for Syngene to drive more valuation at the profitability that it's earning ROEs of 30%, which is definitely profitable, but it's running a risk of, according to me, running a business, getting into business model which is asset heavy. Secondly, its client risk is pretty high. It's almost 70% dependent, 70% of its revenue dependent on top 10 clients, which is very high risk. We have seen in number of cases that when diversification is low, it can it can kill you other way also. So at 30 plus kind of P multiples, and I think after the run it should be easily 35 kind of multiples, which is not justified, I guess. So because even Sun Pharma is not taking that kind of valuations in spite of the size and the profitability profile once, it's, yeah. So I don't think, it's not justified. That's what my call on the stock is.
Okay, and that's perhaps why the stock is also climbing down. Today it has seen a sharp correction. But let's look at a clutch of others. I know you don't cover Divi's Labs and Glenmark. Both the stocks have also been in focus, touching new 52-week highs. Yeah. But I'm going to ask you about the rest of the pack. Stocks like Cadila, GSK Pharma, and the clutch of MNC stocks over there, including Sanofi. What is your take on this, and what is your top pick, if at all, from these stocks?
From a long-term perspective, I like amongst the MNC GSK Pharma, because that company has been, getting its act together in Indian pharmaceutical industry. It is the only company which has committed a huge sum of around 800 crores on facilities which is getting commercialized next financial year, which will boost its earnings and also the profitability of the business. So that's one company which is definitely committed to taking opportunities in the Indian market in a very aggressive manner. So I guess that's one stock. But again, over there valuation comfort is not there. The stock is already 50 plus in terms of valuation. So actually, if you look across pharma space, there is no valuation comfort right now. Actually, they have done more than required run up actually. So from a year's perspective, I am not advising anybody to aggressively go into this sector. And apart from even Alembic Pharma that you pointed out, it's a very high profitable business. They are managing it well after the restructuring that they have done. But again, it's depending upon one or two products, and that we have seen in this quarter. Their performance was impacted because of accounting issue where they launched a product but they couldn't account for the profit, which will come subsequently. I'm not denying that. But what I'm trying to put across is these are smaller companies, but the valuations are run ahead of their. That's true even of Indico Remedies that I track, which is a small cap company. It's trading at 30 times FY 17 numbers. So these are all valuations which are not justified. So I don't see any comfort in the pharma space right now. So only stocks that I'm telling investors to get in whenever there's a sharp dip is Sun Pharma, Ipca Labs, and to that extent Aurobindo. These are the three stocks I'm advising. Rest I'm telling clients to stay away because the valuation is too exorbitant. I mean, mid-cap pharma has actually gone beyond even large cap. So I have no comfort zone or breathing space in pharma right now, actually.
Right, Sarabjit, very, very quickly, one line. Do you also factor in the rupee weakness when you're talking about these stocks? Is that already factored in, or could that be an additional, a factor for re-rating?
That's what I said. See, rupee depreciation as of now is playing out in this year, so definitely it will be a positive factor for this year. Our target is 1 year forward, so even if it carry forwards to next year, that's what I pointed out earlier. The space is already, for me, pharma space is already trading at around 26, 27 FY17 number on an average across the board, if I have to look at. So even I factor in upside, or it to be fairly justified, earnings upgrades have to be to the extent of 20 to 25%, which I think are kind of too high to expect, even given the current rupee depreciation. So I think everything is factored in. That's why I said I find very little breathing space available for investors to get in at this point. So unless
fair enough,
sharp correction happens, we will be looking at the stocks right now.
Okay. Fair enough, Sarabjit. A great, insightful discussion there on the pharmaceutical sector, and why Sarabjit feels that it is completely, priced in. All the good news is priced in, and the valuations are looking very, very stretched out here. Thanks so much for joining us, Sarabjit, with your insights. That's a wrap on Bloomberg Bottom Line. Thank you so much for joining us. Goodbye.